You know or have just found out that your health insurance plan is self-funded or falls under ERISA. What does that mean? Welcome. I am Martine Bruce, your medical bill whisperer. A previous billing manager turned patient advocate, I am committed to bringing answers, insights, and solutions to empower patients like you. So today, let's examine what is an ERISA self-funded plan. What does it mean? What are the pluses and minuses? And then I'll share a couple of tips. So what is it? Let's start with what it's not. It is not a plan bought by your employer on the open market. It is not a plan bought through the Obamacare exchange or marketplace. It is a plan where your employer or company rules the plan, not a specific insurance. Let's get into detail. It is your employer who determines the benefits as well as your share of cost. For more on share of cost, do watch my special video. Basically, your company designs its own policy and what it will cover. It will hire an insurance or third-party administrator, a so-called TPA, for the management of claims, appeals, and other administrative tasks. But that insurance does not pay the claims, only prices services, which are then paid out of company coffers. The insurance or TPA simply applies the terms of coverage as it is not their own. As states' insurance regulations do not apply, and only some federal insurance regulations do, you may have less rights than someone with a regular plan. But you get 3 levels of appeals. The first 2 will go to the insurance, with limited success if you're fighting terms of coverage, as the insurance has no authority to change them. The 3rd level of appeal would go to the Department of Labor, but would usually only rule on whether the terms of a policy were applied, not on medical necessity or medical-related issues. So to keep it simple, you will get an insurance card, use the network of providers who in turn bill that insurance. The insurance processes claims and okays a payment which is made by the employer. The check may say Anthem or Aetna on it, but it's actually your company's money. There are significant pluses to a self-funded plan. Coverage can be more generous and may include perks such as wellness programs or alternative therapies, acupuncture, chiropractics, and more. As the employer does not have to pay high insurance premiums or for the insurance's overhead or profit margins, their lower cost means lower cost to you in lower premiums if you are paying a part or lower overall share of cost. Plans can be customized to the demographics of employees. For example, extended mental health coverage for high-stress jobs, wellness incentives if the workforce is older. Plans can be changed by the employer to respond to employees' requests or changing needs. Most important, the employer is the one with the authority to override or extend the terms of policy on a case-to-case basis. Let's say, extend to more than 12 visits a year for therapy for an autistic child, or to cover a newer cancer treatment, or even to reverse an insurance denial. Now, there are minuses too. Plans can impose exclusion based on moral or religious grounds. For example, no coverage for birth control or abortion. Unless updated regularly, plan coverage may be obsolete or not up to date. For example, no coverage yet for newer treatments or diseases. You must deal with an insurance company and or a third-party administrators with no authority over the policy. Getting things done can be tedious and complicated. And last, coverage may be reduced next year to lower the costs if claims this year are too significant. As for tips, I would bypass the insurance or TPA if necessary and go directly to HR or upper management to get an exception to the policy, to expedite an urgent authorization if the insurance has been delaying, or to ask for coverage to be extended in a specific reason. Too many employees complaining will prompt your employer to change plan administrators or insurance and get involved to remedy repeated mistakes, delays, misapplications of benefits, or poor customer service. A last tip, make a friend. Get to know who the liaison person at HR is with the insurance and or TPA. That person can help resolve issues, review a request for an exception, or research requests for changes and extensions in coverage. Having a point of contact if you have a TPA is also advisable to get issues promptly handled and resolved. And the big boss or CFO's assistant can be a most valuable helper to get to upper management when you need to make a case for an exception or change in coverage. And yes, bribery is okay. Let's not forget, we patients have rights. Insurance companies have a duty to their members and providers must follow certain rules. I so thank you for watching. Your likes, subscribes, and comments help this channel grow to reach out to many more patients just like you. So, thank you.